Well, good morning, Jagender Rana here. The topic for our discussion today is fee for buying insurance policies. Fee for buying insurance policies. The Insurance Regulatory and Development Authority of India has proposed significant changes to the bancassurance model, aiming to replace the current commission-based structure with a market-determined transaction fee system. This proposal, which has been submitted to the Ministry of Finance, is part of IRDAI's broader push to address concerns around mis-selling and forced selling of insurance products by banks. Under the existing model, banks earn a commission on each insurance policy sold to their customers. In the new proposal, banks will no longer receive commissions. Instead, they will charge a transaction fee directly from policyholders, with the premium being remitted to the insurer. The pricing of the transaction fee will be flexible, determined by market dynamics, without any prescribed floor or ceiling. One of the key benefits of the proposed model is the potential for increased insurance penetration through the introduction of multiple insurer partnerships. Banks would be allowed to collaborate with various insurance companies rather than being restricted to exclusive tie-ups. So this would provide consumers with a broader selections of products, enhancing their ability to choose from a variety of offerings tailored to their needs. There is the greater transparency. The overhaul aims to provide greater transparency and fairness in the sector by reducing the risk of mis-selling, which has been a long-standing issue. So by offering a wide range of insurance options, banks can better serve their diverse customer base while allowing insurance companies to become less reliant on individual partner banks, fostering a more competitive and diversified market. So the proposal also aligns with IRDAI's vision of insurance for all by 2047, which seeks to increase the number of insurers, diversify product offerings, and strengthen distribution networks to make insurance accessible to a large section of the population. If approved, this shift could significantly transform the banca insurance landscape in India, making it more customer-centric and transparent. So IRDAI's initiative is part of ongoing efforts to improve efficiency and customer satisfaction in the insurance sector, reflecting a broader move toward modernizing and diversifying distribution channels. The proposal marks a significant step in making India's insurance market more competitive, diverse, and accessible to a wider population. Because amid growing concern about mis-selling through the bancassurance or banca channel, public sector banks have scaled back their insurance sale efforts, leading to a slowdown in growth through banca for life insurance companies in 2024-25. In contrast, life insurance companies affiliated with private sector banks have nearly doubled their growth through the banca channel in the same period. According to industry estimates, growth in the banca channel of life insurers backed by PSBs, means public sector banks, slowed from 7% in FY24 to 6% in FY25. With growth in March slowing to just 2%, banca channel growth for life insurers with private banks was healthy at 15% in financial year 25. But in March, growth was only 7% in the previous financial year. Growth through this channel was 8%. This marginal drop in growth of PSVs led insurance companies due to a slowdown in PSV banca business. So, owing to changes in incentive schemes and scorecards for bank employees for selling insurance, state-owned banks do not really have a concept of incentives for their employees directly for selling insurance products. However, earlier there were some banks that were giving considerable commissions or some rewards along with other incentives. Now they have totally stopped it. Also, RBI, the Reserve Bank of India, has asked banks to focus more on their core business, and insurance is more of our customer service business. So this is likely to have resulted in some slowdown. Banca channel growth for some public sector banks, including Punjab National Bank, Canara Bank and Union Bank of India, in financial year 25 was in low single digits. For State Bank of India, Bank of Baroda, Bank of India, it was in double digits. So this comes after Finance Minister and Insurance Regulatory and Development Authority of India's chairmen flagged concerns about mis-selling of insurance products by banks at the SBI conclave in November 2024. So RDAI had also formed a task force to review the banca framework amid complaints of mis-selling and forced selling at the conclave. The finance minister had asked bankers to focus on their core business and avoid mis-selling insurance policies, pointing out that many a time this also indirectly increases the cost of borrowing for bank customers. So some public sector banks have realigned their strategies and are now focusing on core business. They have also reduced certain incentives offered to their employees, although generally commission for added services like insurance and mutual funds are offered to banks. Some lenders used to give incentives to employees, which has been changed. According to another insurance official, there has been a slowdown in the banca business of PSVs in the past 1.5 years because footfall in banks has come down as customers prefer to buy insurance online. We have to find a digital solution to counter it. The banks have put checks and balances, including video PIVC, that is pre-insurance verification call, to prevent mis-selling. So banks have undergone changes to counter mis-selling concerns. According to analysts, if distribution by bank partners slows, smaller insurance companies will have to diversify to other channels, while the bigger bank-led insurance companies already have a diversified channel mix. So this is the development in the banca channel going to be implemented very soon. Thank you very much.